So I'm going to talk about the three things that you must do if you want to make a six-figure income. And that's kind of you can do this full time if you're making a six-figure income. So the first thing you need is you need leads. You need a lead source. So I know a lot of you guys are from, different teams, but most of you are from Oscar's team. He's got 900 leads in the CRM right now. So, and he provides those. All you got to do is commit to dial. Now, I talked to Felipe earlier, and he's like, man, we had a really good dial day today. A lot of people were dialing. So I think it starts with one person making a stand. And that was Felipe saying, hey, I'm going to call and I'm going to get appointments. And then, yeah, a lot of those people don't show up. You can't get frustrated with that. That's just part of the program. You're going to get no-showed. One of the things that Juan Franco talked about when he did the call, he said what he does the day before, he'll call those IUL appointments and just remind them, hey, do you got it in your phone? Looking forward to talking to you. Confirms the time, and that's increased his show rate. So call them the day before. It really works. So you need leads. Without leads, you can't get started. The number two, you got to call those leads. And the best time to call them is when they come in. I think Francis will kind of attest to this, though. The longer period of time that goes without you contacting that person, they cool off. And so the best time to get a hold of somebody and to dial the phone is when you first see these leads. And so I'm not saying you can't call older leads and get appointments, but it's just more difficult because people don't answer their phone. Last week, if you weren't here, Francis talked about his July outbound phone calls, and he had made 4,900 and some calls. And so in between the appointments, he's on the phone and he's calling. So he has by far the best habits of calling. And also, it's no coincidence, by far, he's the leader on the team in terms of issue paid. There's a direct correlate. What do I want to say? Correlate? Is that the right? Correlation. Thank you.
You took correlation and parallel and put them together. I got you.
Yeah, right. Yeah, I got created a new word.
Yeah. Somebody call Webster. New word.
Yeah, right. See, you don't have to be a rocket scientist to do this. So a direct parallel or correlation between the two. So you got to get the leads, you got to call the leads, and then you got to book Zoom calls. And so there's a fine line between really drilling on the initial discovery call. And sometimes you can scare people off where if you took a little lighter approach, you get them on a Zoom call. The goal is, and this came from Juan Franco, who did 1.3 million 2 years ago and 1.1 million last year. And he says that you're trying for 30 appointments a week. Now, you may not get them, but if you shoot for 30 and you only book 15, you're going to have a great week. Okay. I'd love to say, hey, your goal, Kenneth, is to book and write one policy a day. Well, when we're all starting out, we just want to write one policy, right? Just one. And then you get one, you go, wow, these people are really looking for IULs, and it turns into 2 and 3. So you'll ramp that up as you go. But the goal here, we've got 36 people on this call. So the goal for September, we want to have 10 people, and I think that's a easily achievable goal. 10 new people write a policy for the first time. And what that will do is all the people that don't write a policy, it's going to build their belief. Okay. Because outside of us that have been doing this, when you start, it's like you have this hesitation in your heart and you just don't think that this is everything that it's cracked up to be. And then once you get in the process, you see your peers around you starting to write policies. You're like, dang, I can do this. And then you write one and you go, man, what was I fretting over? Right. So it's all a head game right here. It's all, if you think you can, you can. If you think you can't, you can't. And either way, you're right. And I got that from Bernie Smalls off of LinkedIn or something. I don't know. Bernie is great. He posts the best stuff. The first time I ever met Bernie, and Francis brought Bernie in, and he has this great picture in front of a jet. I'm like, Bernie, I didn't know you were a pilot. He goes, I'm not. It was a great picture. So it was awesome. So it's just a mind game, and if you think you can, you can. If you think you can't, you can't. Either way, you're right. What I would encourage you to do, like when Danny got going, Edgar got going, he'd call me and he'd say, I'm trying to write a policy or pretend to write one on my sister, and I have this question, I have that question. And see, I just said to myself, and today, Leanne, we were talking about this, I just knew he would be successful because he took the initiative to practice those illustrations when we weren't on a call together. And so this is kind of a self-study program, but as you learn and then you come into this tonight, you pick up so much information that you never ever heard before because you're in the process, right? Mike's another one, Connecticut Mike, man, he is in the process. And I mean, when we hung up, I'm like, I would gladly spend 2 hours with 100 people like Mike or Felipe, because they're in the process, and I know it's just a matter of time until they succeed. So the next part of this, we're going to get into kind of the thought process behind, when you go through this. And a lot of the stuff that I do, I got from Francis. He's just really good at what he does. He's got a wonderful demeanor about him. Never's too high, never too low. He's just very, very steady. So he's going to go through kind of the key points as he's showing this to somebody and what he's trying to get out of people. So Francis, it's all yours, bud.
All right. Thanks, Neal. I'll try not to let you down.
I know what to say.
All right. So like Neal said, some of you guys have seen my slides, my presentation. This is what I start off with in my Zoom. And you may have Neal's presentation, because you might work with Neal or Oscar's or whoever's presentation. They're all going to be similar. So, you can always tweak what you have or just make sure that you're using something to help explain or help help the people along, I guess. Okay. So when I start off, I don't start off necessarily sharing my screen. I normally just start off with myself. So I guess I should have done that. I should have just started off with myself. So, I'm talking and I'll say, hey, Neal, nice to meet you. I'm glad you showed up on Zoom, on time. That sure helps me out a whole bunch. Well, let me ask you, what was it about the IUL that you wanted me to go over? Or what was it that, brought us here today? And they'll respond, whatever it might be. Yeah, I heard, about being my own bank, or I'm really interested in creating generational wealth, or whatever. They'll come up with something. And so I catalog that. Sometimes I'll ask them to dig into it a little bit. And so why is that? What exactly do you want to do with that? Just to kind of find out. But I don't dig in as much, I probably should dig in a little bit more. However, I just want to know where they are and what they're looking for. Are they looking for just life insurance? And especially if it's someone who's older, are they looking for generational wealth? Because, a 60-some-year-old, the IUL just does not perform as well as a 30-some-year-old. It's just given. It is what it is. They don't have as much time. The cost of insurance is a bunch, So I'll start off and I'll say, okay, so I'm going to share my screen now, and we're going to, get started. And so that's pretty much how I do my Zoom. I start off just by we're talking a minute or two small talk. And so, hey, what brought you here, or what were you interested in? And then I'll ask them. And I asked this question because I went through all my slides one time, and I was right at the end, and the lady was like, I see you, but the slides are really small, and she had her views all messed up, on her Zoom. And so I always start with, okay, so Neal, you should see my driver's license bigger than anything else on the screen. Is that correct? And I want them to say yes. And as long as they say yes, I say perfect. So I show my driver's license because I don't want any, I'll even tell people, hey, you're on a cell phone. Okay. If you're on, I could tell they're on a cell phone. So I tell them to turn their cell phone sideways so they can see it more better in landscape. Does it auto rotate? Now, sometimes you got people, they turn it sideways and the damn thing doesn't auto rotate. I really got to figure out exactly how to auto rotate an Android, and I can do my iPhone, tell them how to do it through an iPhone, but an Android, I haven't figured that out yet. So somebody needs to share that with me at some point. But I want to make sure that they can see it as comfortable as possible. I also want to eliminate, I'm building trust here. I am giving you my driver's license. It has my home address. It has everything, about me. Okay. They can see it's me. They can see my picture. I want to eliminate any doubt, because I am dealing with people from Connecticut to California. I very seldom deal with somebody in my backyard to where I can go meet them at the office. Okay. Or they can come to my house, home office, or whatever. I mean, I am always doing this on Zoom. 99.99% of the time, I am doing my presentations on Zoom with somebody who's in a different state. And so I want to eliminate any shadow of doubt, that is the whole reason I show my driver's license. I then show my state license. Well, why do I show my state license? Same thing. Most people want to know that they're working with a licensed agent. It also has the same name on it as my driver's license. They know I'm legit. So the more I can honestly say I might have had one time where I've had somebody who didn't want to give me their social security number when we were doing an app. Otherwise, it's no big deal. They know who I am. We're going through the app. It's showing, the app showing right there. And, I don't ever have anything. Well, I don't know who you are, or I don't trust your banking information. It's second nature. I never have anybody saying they don't want to give me their banking information. And the main reason is because I'm showing my driver's license. I'm showing my state license. The others I go through pretty quick. I tell them the company I work with. I use this for more credibility. Hey, the nice thing about working Family First Life, we help. We represent over 40 carriers, so we can help pretty much anybody. So that's why I'm using this slide, because most people have recognized Transamerica or Aetna or Mutual of Omaha. Gerber Life. Everybody recognizes those. And then I'll lead them to where I want to. Most of the time, I'm leading them to National Life Group and all the accolades of National Life Group, which is down here in the bottom and the lower. Okay. And that's what I'm doing there to kind of build up the company that I'm getting ready to do the illustration with. Now, for example, I had a gentleman that I felt like would do better with F&G. And so I didn't even say anything about National Life Group. We went straight to F&G because I've had more success with felonies or past felons, however you want to call it, with F&G than I have National Life Group. So, and then I asked the people on this slide here, this is just a simple definition of what the Index Universal Life is. And I ask him, I'll say, so let me ask you how familiar are you with the Index Universal Life product? Not really. Most people say, I haven't really heard, I don't know much about it. I'm learning about it. A friend told me about it. I saw it on TikTok, Instagram, whatever. So I just have this simple definition that I literally read off to the people. Okay. It's pretty simple. And to help them understand what it is we're talking about, because I want them to be knowledgeable, and I want them to take that knowledge and say at the end, yes, let's do an application. That's the whole reason for doing this, is to get that application done. The last sentence right here, 0% floor protects you against negative market performance. Well, that leads me to my next slide. So that I just go right in. And this slide does an excellent job illustrating that fact, that sentence that I just read, a 0% floor protects you against negative, you know. And so what this is showing is how indexing works. Most people don't understand how indexing works. You know, you'll have people that'll say, man, I wish I knew about this. Well, the reason, if you guys don't know why, most people don't know about an index universal life. It's not because it's a brand new product. Okay. It's been around since the mid 90s. The reason why people don't understand the index universal life, okay, in the indexing, just indexing period, is your financial advisors, they don't talk about it. Okay. So because financial advisors, if you look at the money here, if you're putting 100,000 in and it grows to 115 and 129 and 137, 153, goes up to, 181 and 202, they don't make any money on this. Okay. They only make money on the first year amount, just like we do on insurance. Okay. Well, this over here is called assets. If you're not familiar with that, under management, AUM. Financial advisors make money on AUM. They don't want you putting your money in a IUL. They can't make money year after year. They can't. It doesn't grow their AUM. So they're not making. They don't see it as a money making product. Okay, like we see it, because we don't. Now some of you may have your Series 6, Series 7, but I don't. I'm just a life insurance and health and life is I help people with IULs and annuities. Okay. So this slide, I'm explaining the 0% floor, the difference between indexing and the rest of the market, the rest of investing, when the market goes down right here. Oops. So when the market goes down, I'm showing, what this does, how this works, and this 0% floor. So I am using this to, illustrate indexing. I want them to understand it. I'm going to ask them, hey, do you have any questions on this? I probably spend more time on this one slide than all my other slides that I'm in there. All the others, I'm bouncing right through it, because I want them to understand how the IUL works and why it's so different, why it's so powerful. This is the reason why. You never lose money inside of an IUL. It's just a given. It's a fact. You do not lose money inside of an IUL. It's written in the contract. You have a 0% floor. And then this slide here, it's pretty simple. I say, hey, Neal, these are the reasons most people will acquire an IUL. And then I'm going to walk through each of these reasons with them. Okay. And the reason I do is because then I'm going to ask them, after I talk about all these different reasons, I'm going to ask them, at the end there, I like that. I realized that laser pointer. I'm going to say, hey, of these reasons, which ones are the most important to you? And I wait. I shut up. It's my first trial close. It's really my first close. I don't think I've ever had anyone say, none of them. Well, if they do, we're done. I don't even have to go any further. Okay. But no, we're going to get someone. And, the funny thing is, most people are going to start reading, well, yeah, tax-free cash accumulation and the zeros, heroes, safe growth's good. And, well, all of them. And I laugh and I say, it's funny you say that, because 9 out of 10 people will say all of them. And so what does that do? That just tells them that, people, they like to do what other people do, however that goes. It's the something in numbers, my mind's not working well. It's at all old timers. But anyways, people like to do what others do. It's that mass, people
Herd
like
mentality.
the herd mentality. That's it. That's it. So, but it's true. 9 out of 10 people will say, hey, all of them. And then from there, I just go to my illustration. So I'm getting a close. Also, if they say be your own bank, or man, a lot of times it's funny. They wanted to be their own bank when I asked them at the beginning of it. But then at the end, when I say, hey, what are your reasons? They say, oh, death benefit, living benefits, and leaving a legacy. I mean, totally change their tune. So now when I'm doing the illustration, I'm going to show them how big the legacy is going to be that they're going to leave. I'm showing them what the death benefit's going to be, especially if they're interested in the death benefit. I'm definitely not going to go straight to increasing. I'm going to leave it at level. Why? Because it's going to give them a nice death benefit, but it's also going to give them and more living benefits if we do that. If we change it, So I'm listening to what they say. So that's, again, they say use you have 1 mouth, 2 ears, use them in proportion. And that's what this slide is all about. Is they're telling you what it is that they're interested in. Take that information and build on it and show them in the illustration how this is going to help them.
Yeah, and we're gonna do illustrations next week because it's a pretty in-depth category. So you've shown them the illustration, so you're kind of using your PowerPoint to set up your close. You're doing a series of little trial closes. So you've shown them the illustration. So how do you close and go from the illustration to the application?
I use the and we can do that in the illustration next week or whatever, but I use the puzzle pieces. And I really hate the new cover of the the report. I don't know if y'all like that or not, but I don't like it.
Yeah, it's different.
They did away with our big puzzle piece.
I like the puzzle too.
Yeah. So you summarize the 3 puzzle pieces, and then what are the words?
Like, I think it was Juan's clothes or someone's clothes. I'll say, do you have anything like this in your portfolio? Or I might just say, do you have anything like this? Just depends on the person I'm talking to. And if they say, most of the time they say no. Sometimes they say, well, I do have some life insurance with work. And then I'll say, would you like to have something like this? Yes. Okay. Well, great. Well, here's what we have to do. All we have to do is put an application, see if we can get you approved. That might take a week, might take a month. What we want to do is dial in where you're comfortable for year 1. This $500 a month. Are you good there? Do you want to go up, down? Where would you like to be? And no, 500 is good. Okay. Then we put the application in.
Awesome.
That sounds like Juan Franco.
Yeah.
Yep.
That is Juan Franco.
So it's a great thing about FFL. We're all allowed to use others' information to help all of us do better.
Yeah, it's priceless, man. I love it.
Yeah, and there isn't one way to do it. We're not saying that, we're the police and you've got to do it this way. I use a little different PowerPoint than Francis does. Everybody, there's room for your style, but the main thing is, are you finding out what they want? And do you have a seamless way of going from the PowerPoint to the illustration to the application? Those are the little, those little phrases really, you'll get those down. So excellent. Now the last piece, and then we'll go to Q&A. But the last piece we want to talk about is finding money during the presentation. And when we talk about finding money, what we're really looking for is that added money that's out there that we can roll from a 401k to an annuity, or roll from a 401k out of a broker account to the individual and then into an IUL. And the guy that's just really good at it, Daniel, where do you find all this money? Is Daniel Broadway. So Daniel, you're next up, bud.
What's up, y'all? Francis, that was dope, dude. Thanks, man. That was huge. I think people learning from a visual aspect is awesome too. So that's always awesome. As far as finding money goes, Neal asked me about this, and I just started thinking, okay, how do I find money with somebody's account? And I'm like, all right, well, I ask them. And I wish it was like, I wish it was more complex. I wish it was sexier than that. I wish it looked different, but it just is what it is. Like, I mean, I'm going to pick on Danny, right? Danny, go ahead and unmute yourself because you already got your first IP sale. And I love picking on you, bro, because you're a dope dude. If I'm talking to you about your retirement goals, you've asked me for help, right? Like, I'm that guy that you've asked to learn more about the IUL for, right? So why would it be out of pocket for me to ask you this simple, or I guess to just say, why would it be out of pocket for me to ask you how much you're making? How much money you make in a year? How much are you putting towards, or how much are you wanting to put towards your IUL every month? Right? So if I'm going to ask you these, I just kind of go through the clients like this. If I'm talking with Danny, I'm like, all right, dude. So you asked me to kind of go through some of this stuff with you about learning what the IUL will do for you for like a retirement plan, right?
Right.
Okay, cool. So what we're going to do is just kind of ask you a couple of questions and find out what's going to work best for you. And I'll ask them again, what was it that made you most attracted to the IUL as a whole, dude?
Just the market volatility is just crazy right now. I just want to put my money in someplace that I know is going to grow and I'm going to be able to have it, down the road.
Got it. Okay. So you've probably already thought about how much you want to put towards the policy every month, or do you want to do like an annual thing, or what's that look like for you?
I'm not sure exactly. Like, what's the minimum I can start with?
Minimum is 0. If you don't believe in the product, don't put a dime in it. If you don't believe in it, don't put a dime in it. But if you really want your retirement goals to happen, like what you told me earlier, you want to be able to retire, travel wherever you want to, and live tax-free, that's going to require you, words are hard tonight. It's going to require you to put some money towards that retirement goal, right? So, a lot of people, they're kind of strapped for cash. I get it. But they really don't realize how much money they have going out, right? So you've got a retirement plan right now currently, right, or no?
No.
You don't? Okay, so you're not putting any money towards like a 401k, Roth, or anything like that?
No.
Okay, you just changed jobs though too, right?
Yeah.
Didn't you have an old 401k there, an old Roth or something like that?
Oh, yeah, I mean, sorry, I did have a Roth, yeah.
You did? Okay.
Yeah, I do have a Roth. Sorry, I do have a Roth, yeah.
How much is sitting in there now?
Oh, I don't know, like 50 grand.
50 grand, give or take a little bit?
Yeah.
Okay. So why would you want that money still being at risk with the market if there was an option to allow you to put it into something else that could help it grow and build? Because it's not growing or doing anything for you right now, right?
Not really. It's just up and down every single day.
And you're not making any contributions, and your old company's not making contributions, right?
Right.
So that money's just a buoy at risk of the market, or at the mercy of the market, right?
Pretty much, yeah.
Okay, so if that money is just at the risk of the market, what happens if there's, heaven forbid, I don't want this to happen, but what around the time that you plan on retiring, what happens if there's a huge market crash? What happens to that money?
I mean, I'm SOL.
Pretty much. So if there was a way for me to show you how to incorporate that into your policy, would you like that metaphorical buoy of money, if you will, to actually start working for you and turn it into a speedboat for your retirement?
Yeah, for sure.
Okay. So I found out he's got 50 grand in a Roth, right? Like, then I'll ask different questions like, okay, so with your current job now, are you contributing towards a retirement plan? Have you thought about it? Yes or no?
No.
Say yes.
Oh,
So
sorry,
with your
yes.
current job now, are you making any contributions towards like a 401k or Roth or anything like that?
Yes.
Okay. What are you putting towards right now? A Roth or a 401k? Say 401k.
401k, and I'm
Great.
doing the match.
Okay, great answer. How much are they matching for you right now?
Like 4%.
4%. But you're putting in like what, 5-6%? How much are you putting in?
I'm doing up to the match.
Up to the match, 4%? Okay, that's smart. So you like the idea of getting free money from the company, right?
Yeah.
So inside that 401k, you told me you had like 250 grand sitting there, right?
Yep.
Okay. What happens if the market ends up like dropping tomorrow?
No, I mean, I look at it every day, I freak out.
I mean, yeah, why would you look at something every day if you're not worried about it?
Just out of
Obviously,
habit,
yeah, I mean, obviously you're worried about it, right?
right?
So, I mean, you're making 200 grand a year right now. So you're putting what, 4% of your paycheck, what, you're roughly putting about $1,000 a month towards that policy, something like that. Is that
Something
right?
like that, yeah.
Okay. So the company's putting another $1,000 in there for you. It seems like free money, but it's almost like a house of cards, right? Because if the market drops tomorrow, you could end up being like not or not having anything, right?
Right.
So what if I told you there was a way to not necessarily take that same money from your 401k that's sitting there now, but kind of just let it do what it's doing. And then you start making contributions towards a policy or towards an account, if you will, that will continue to grow with you with compound interest that you control, that will never leave you if you leave the job, right? It'll always stay with you. It'll always continue to grow no matter what. And you have checkbook liquid access to the cash whenever you need it if there's an emergency. No 59 and a half rule. And every bit of the cash you access is tax free. How does that sound?
I mean, that sounds great.
But you can't do that with your 401k though, right?
Not without taxes or penalties or, yeah.
Yeah. So you realize that with this IUL, that same $1,000 that you're putting towards that 401k, you could be putting, let's say 750, 800 after taxes, something like that into that IUL and make that a reality for you, right?
Yeah.
Let me show you what that looks like. And then just roll right into the application. So you can do it on a monthly side. You can also do it on old 401ks. You can do it on, like there was a kid that I was working with last week. He just had a random $200,000 just sitting in an account he's not doing anything with, but he wants to do something with. It's just sitting there. So he wants to put it in something that will allow it to grow, and he can still have access to it because he wants to buy a little bit of real estate, but he just doesn't know where to put it or what to do with it. So I showed him the IUL, the PDA strategy, putting it in over the course of 5 years. And he's like, you've got to be kidding me. Why didn't I do this sooner? I'm like, well, I'm glad you asked. Now I'm the guy that can help you do it. So there's a lot of ways to find like different monies from different people. But the biggest one that I would use is this first question. Write it down if you can, or if you got like an amazing memory, just, like focus in on it. But the first thing I would ask, do you have any other type of retirement accounts working for you now? Like actively working for you now? Do you have any other type of retirement accounts working for you now? Or you can even say working or not working for you now, like 401ks, and even mention old 401ks, Roth accounts, CDs, high yield savings accounts. Mention anything like that. Do you have any type of retirement accounts working for you now? Okay. And then the second question I'll ask is, are you currently making any monthly contributions to another retirement account besides this one here? Are you currently making any monthly contributions to any other retirement account besides this one here? And then the follow-up question to that one is why. You'll just ask them why. And the reason why I have the confidence of asking why is just simply because I know for a fact that the IUL as a whole, based off all the numbers that I've seen, will outperform any other type of what we call stereotypical investment retirement type account that's out there right now, because you don't have to worry about taxes and fees in the IUL. As long as you have enough time, you're going to end up outperforming any other type of larger long-term investment account, and you'll have access to the cash tax-free. You'll have more income working for you later on down the road than you would in any other type of quote unquote investment strategy. And some bullets that you guys can use in your gun here to kind of break down the 401k that I love. Number one, how many of you guys know who Tony Robbins is? Raise your hand if you know who Tony Robbins is. Yeah, almost all of you guys. Okay. So write this down. Tony Robbins, he's one of the most credible people out there. If you can't use your own credibility, use somebody else's, right? Use a third party. Tony Robbins sat on the board of America's Best 401k. And he described the 401k as the following deal. I'm going to say a lot here, but I want you to try to follow me, okay? He described the 401k as if, let's say you and I are going into an investment deal, okay? You're going to put up all the capital. You're going to take all the risk. And if you win, you're going to get roughly 30% of the profits. And whenever you decide to take your money out, I can decide how much of the shares I take whenever I want. How many of you guys would make that deal? I didn't see any hands that time. That's weird. Reason why is because that's a horrible deal. but every single person that has a 401k makes that deal every single time they end up partnering with the government for their 401k. Like that other person that they decide to partner with is not me, it's the government. Because they ultimately get to decide what taxes are whenever they pull that money out. And are taxes going to go down or going to go up later on, potentially? Anybody? Bueller? Anyone? Up. Got it. What's the national debt going to do? Is it going to flatline? Is it going to go up? Going to go down? Like, is Bitcoin going to save us? We don't know. I don't know. Up. Thank you. We're up there. So you can always use that. Like nobody really knows what's going to happen, but there's a speculation that taxes are going to go up. There's a speculation that government's going to get their money. Like, how many of you guys owe the government money that they didn't try to come after you for, right? Like, nobody wants to owe the government money. Don't do it. Neal, do you want to owe the government money? No, they're going to get you. They're going to find a way to get it, right? So we don't owe the government money. But if we're going to go on a deal with the government, you're going to make sure they're going to try to get paid too, right? So it's never a good deal to go in the deal with the government. That's what every single person's doing whenever they have a deal with 401k. Second thing that I found, this second thing that you can write down too, the own creator of the 401k, and you can Google this too. Like, make sure you have this for your own records. I'm going to shorten it. The creator of the 401k actually stated from his own mouth that the 401k is a monster that needs to be destroyed. How many of you guys knew that? Yeah, a couple of you guys. The creator of the 401k, it was made as a tax strategy to alleviate businesses of their own tax liability. It was not made to actually help out the individuals that were taking advantage of the 401k. It was just a tax code. And people are trying to take that as a whole retirement plan as of now. So, yeah, that's just a little bit that I've got for you guys. I hope it helps. You just ask the right questions to the right people, and then you end up finding the money. So that's it.
Awesome. Thank you, Daniel. Appreciate it. We could do a whole hour just on that, right? But I want to save a little bit of time for questions. I think, Chelsea, you had your hand up. So why don't you go ahead and kick it off?
And I put my slides in the chat, so anybody wants those.
Awesome. I put that video of Tony Robbins, a link in the chat. If anybody wants that, just click on that link while we're doing the meeting, and you can go ahead and download that video.
I just had my hand up to agree that 401k was originally a tax write-off for employers, that it ruined personal pensions and has really ruined retirement. So I try to stress that to people. You know, they even talk about it now, that it was never intended for what it's intended for, and it's going to cause a lot of problems in the future.
Amen. Well, the other thing, I went into Chat GPT and I said, give me the history of every time we've come off of a series of Fed raises. Give me a history of what happens when they cut rates for the first time. And it gave me 3 examples. And it said, if the people perceive the economy's good, then like in 1998, 99, it goes down and then it starts going back up. But if they perceive that the economy is weak or bad, the first example they gave, the market fell 30%. The second example, which was 2008, they gave the example of 50% drop. And so that's major, right? And if you're getting ready to retire, or you're in your 50s or even your 40s, I mean, and the market drops 50%, that hurts. So anyways, Michael, you've got your hand up. Go ahead.
Hey, Dan, I love the one of the things that I noticed that you do that's really effective is you kind of like create like metaphors or simple examples to just make it very digestible and relatable. So it's not in the IUL. It's like that. You got to come up with like lists of like whole life policy, 401ks, Roth IRAs, because all those like those storylines, those are money. Like, and even just like little strategies, like how would you deal with someone that has a 401k? So similar to this example, but say they're getting a 5% match and they don't want to mess with their match, but talk them away from, say, the 15% down. Say they get a 5% match and they're currently doing 15%. Like, what's your strategy with, do you try to go after that 10%? Or if they're really adamant about doing the match, or like, what's your strategy with when you have someone that kind of like, they might be open to that 10%, but then the other 5%, et cetera?
Yeah. So what I'll do is like my favorite saying right now, and Neal actually checked me on this, so it's not always true, but in my world and in the financial industry with what we're pulling, people lie but numbers don't, right? So I don't want to be a silver-tongued devil that'll tell that person anything they want to hear. I want to essentially just show them what's up. So I use Agency Rocket. I don't know if you guys use that or not. I don't know if I can promote that or not, Neal. It is what it is. But I use Agency Rocket, and if you want, like, I'll get your number later. I'll get it from Neal. He talks highly of you, by the way, so you're doing something right. But I'll show you what I'm doing with Agency Rocket, and it actually maps out where their track is going to be with a 401k versus an IUL. It does the comparison for me. So if I'm going after that specifically, that's the software that I use. But first I'll ask them, like, okay, how much do you want to put into your policy for your IUL? If they're struggling to find money to put into the IUL, that's when I'll go after it. But if they're wanting to put like 1,000, 2,000, 3,000 a month into the policy already, I'm like, okay, cool. And I'll just let them go ahead and do it. And then I might show them a little bit of room afterwards, but if it really comes down to it and they're struggling to put any money inside the IUL, that's the only time I'll go after the additional 10%. I'm like, look, if you love the 401k so much, I'm like, look, keep your match. That's cool. But let me show you how you're losing money. Right. And if you're not losing money now, you're thinking, okay, well, paying taxes is never a good thing, but would you rather pay taxes whenever they're cheaper or more expensive? The obvious answer is whenever they're cheaper. Well, when are taxes ever going to be the cheapest? The answer is now, right? Always pay your taxes now, because later on, in the event that they do end up going up, you're not going to want to pay that, because it's going to take out anywhere from 20 to 30% of your total retirement account, and everything that you spent your entire life building up for will just go right down the drain really quickly. And I'll just show them that. So I'll only go after that if it's an absolute last resort. And if they push back too much, I'm just like, okay, well, we'll just move on.
How about freeing up money within their budget? And I'll give up the floor after that. I was just wondering, like, in terms of when people like are hesitant to say they don't really have a ton of money to invest, but they're, do you have any like suggestions on or examples that you use about what they're currently spending money on in general and how they could maybe, as opposed to putting money on a credit card, put it into an IUL and use it as like a rainy day fund? Or do you have any other strategies like that you use?
No, not really. The main reason why is because people are creatures of habit, and you have to understand too that the things that they've already done to get them to this current point in life that they're at right now will not change, because you're not going to be there the entire time. You're not going to get them to change a habit in a 30-minute conversation. So how they continue to live their life will always be the same type of thing that they end up doing to keep their level of comfort and to keep their lifestyle. So if it comes to the difference between them having that Subway sandwich or that McDonald's biggie bag or whatever it is versus paying their IUL, they're going to go to Mickey D's because that's the way they feel they deserve to be treated, right? It is what it is. And you're not going to change that over a 30-minute conversation. So if they're going to balk at me too much on this, I don't fight them. I'm fighting a losing battle at that point. So I just move on.
I was going to say, I always like to say exactly what you said. If they're going to go to McDonald's once or twice a month, I always ask, well, will you give up going out to dinner once or twice a month? So that's one way that I ask people about money that they say they don't have.
Excellent. Hey, Oscar, the floor is yours, bud.
Thanks, Neal. Francis, I got a question for you, buddy. Tell me about the soft closes that you mentioned. I know you talked about when you asked the first one, about which particular benefits. So that was your first one, right?
Yeah.
And then what were your other 2 or 3?
So usually it's more during the illustration, that, I'll pretty much, find out, I guess they're not necessarily soft closes, but I know where they are. Okay. As far as, when I'm showing them how the money accumulates, or if they mention generational wealth, and it's 1.7 million when they're 85. Would you like to leave 1.7 million to your family? Well, who's going to say no? So again, it's that sales to the more times you're getting them to say yes, yes. Would you like to do that application? Yes. You know, that's really all it is. That's all your trial closes or soft closes are, is just getting them in the habit of saying yes.
Yeah. So when
Really.
generational wealth is being brought up, I guess these are the questions that we're asking at the beginning, or these questions being asked during the discovery call?
No, that was in the reasons. That was in my last slide. So, where I'm saying, you know, hey, Oscar, what would be the most important reasons for
Oh,
you
yeah,
to
yeah,
get the
yeah.
IUL? And
Gotcha.
then
The one that has all
they'll go through, oh, well, the death
being
benefit,
your own
leaving a
bank.
legacy. Okay, leaving a legacy. And I'll say, yeah, you know, the IUL is probably the best permanent life insurance to pass on generational wealth. And so, you know, it's that kind of thing. So I'll show them how big the death benefit gets when they pass in their 80s or 90s. And normally it's huge if they're putting a decent amount of money in it, or if they're younger and starting, and then it gets big. But I don't do as so much through except for that last slide. That's probably my first initial you know, sort of trial close, if you will, or finding out where what their hot points are. And then it's really more in the illustration as I'm building the illustration, maybe asking them about, you know, when they're wanting to retire, and you know, what they're wanting to use the money for, especially if they want to be their own bank. Well, what would you use that for? You know, well, I'm looking at buying some property. Great. Let me show you how this works. You could take out 20,000 here. In 2 years, you could take another 20,000. You can see how it builds. You know, if it's building 20 or 40,000 over 3 years, you might bounce every 3 years. Now, look, you can have 10 properties by the time you retire. If they're all throwing off $1,000 of income, there's an extra 10 grand that you're going to have passive income to retire. So you're just helping build on everything.
Thank you.
No problem.
Then you muted, Neal.
Yeah, I don't know who's all next. We got Bernard, Wendy, and Lazaro. Hey, since you started, Lazaro, why don't you continue?
Oh, okay. I was saying that Neal was muted. Yeah, my question actually is, how do you, because I know Neal hasn't showed it yet when he was presenting the screen, is how do you deal with the people who want to transfer over, well, I could, like myself, for example, a Roth IRA to the IUL? How do you handle that transition without them paying penalty? Is that possible, or they have to sell their assets?
Oh, you
Impossible.
don't.
You have to put it into an annuity. I would encourage someone to put it into an annuity. Now, I will run the numbers. And I had a guy, you know, he had 25,000 in it wasn't a Roth, it was just an IRA. And he was like, you know, I'd like to move that into the IUL. And so we calculated it was going to be, I don't know, 13 or 15,000 or something after taxes and after the penalty. And then we put that into it, showed him how much it was going to grow. And he felt really good about that, you know, because now he doesn't have to worry about any more taxes. If this grew, you're going to have to take off 20% maybe 30% taxes, you know, so that was going to be that much, you know, that you reduced. Might as well reduce it now. Like Daniel said, pay taxes now. Would you like to pay taxes now when they're cheap, or later when they're more expensive? Because later you're paying on the whole thing. Okay, you're not paying on the seed, you're paying on the harvest, the taxes on everything. So all the growth. You're paying.
Well, Francis, I had a follow up to that. Like, for example, I have a Roth IRA. Why would I want to transfer to an annuity when it's tax deferred rather than an IUL that's tax free?
Well, it just depends on what your Roth IRA is in. An annuity uses the indexing principle. Okay, it's going to be an index annuity, not a variable annuity. An index annuity has a 0% floor. You'll never lose money. If you roll over 25,000 in from, the Roth to you'll still do a Roth annuity. Okay. It's just not in the market. The vehicle is the annuity, the index annuity versus stocks, bonds, mutual funds, whatever your Roth is currently in. So all you're doing is you're rolling it. No taxes are, you still can't touch it till you're 59 and a half. You get all the same rules, but it's safe. It's only going to grow. It'll never go down ever.
Yeah. And Lazaro, Connecticut Mike mentioned that you were looking at something like that. And I said, hey, we can jump on a Zoom call and go through it. But there's no way you can roll out of traditional 401k without paying taxes. And even, I think you said you have a Roth. Is he going to pay the 10% tax on a Roth?
Well, he'll pay, he won't pay taxes. You'll pay the penalty. That's
penalty.
All.
Yeah.
Because he's already paid the taxes on it.
So we'll do a deep dive. We'll schedule that and do a deep dive into that. I didn't realize I was muted before. So let's do Bernie, and then we'll do Danny, and then Wendy, and then we'll wrap it up for tonight.
Okay, thanks. That was very good, Francis. Quick question about the financial inventory. Do you use that at all?
I've been thinking about bringing it back, but no, I haven't been. Neal may do one. I know one of the guys in our office, he does a whole financial inventory. Okay. But his process is a little different. It's too much work for me. he does everything. He builds an illustration, not in front of them, but before he gets on the Zoom with them. And so he's doing a lot. His discovery call takes a lot longer. He's getting more information in the discovery call. I build everything in the Zoom because that's when I've already built the credibility, and it's just easier to get the information out of them. How much are you making? If I'm just a guy on the phone. Here I'm a person in front of him on Zoom.
And we also have a CRM, and I know you put a lot of notes in the CRM where we used to write it in the forms.
Yeah, okay. Correct. I am paperless except for keeping my little tracking sheets, but otherwise, I've gone paperless.
Okay, very good. Thank you.
Yep.
Danny, you're up, bud.
I have so many questions. I don't even know where to begin, to be honest, because all this stuff was really great. So thanks everyone for taking the time to impart the wisdom. Just real quick, somebody said that they called the day before to just kind of verify their appointment. Were you talking about discovery call or the actual presentation, or both?
I think that's what Juan told us on the call. He calls the Zoom calls and just reminds them because discovery calls, usually the people are booking those. I suppose if you had enough time, you could do that. But once your schedule starts getting full, it's all you can do just to call the Zoom calls. Yeah, that's where the money is.
And just a quick follow-up, like Francis, you seem to be getting, seem to get like a lot of quality leads. Like is there anything special you do? Is there anything outside of like Google Ads, or it's just, how are you able to find like quality leads the way you do?
Yeah, I say don't fill this out unless you make 150,000 or more a year.
Nice. Nice.
No. I mean, I just go through more leads and more appointments than everybody else.
Yeah.
That's all. I get, I want to put $50. I want to be my own bank, and I want to put $50 in it. Really? Well, that's just going to cover your insurance and probably won't even cover that. So this is not going to work for you. And I mean, I get those, so it's kind of like Daniel finding money, just the more you ask and the more times you're in front of somebody, the harder you work, the luckier you get.
Cool. Thank you.
Wendy, welcome.
Hi, thanks for having me.
You bet.
I just wanted to share something with you and kind of piggyback on what Daniel was talking about. Kamala Harris, I'm a news freak, so I have the news playing on a TV in my office all day long so I can see what craziness is going on out there. but Kamala Harris wants to put a 44.8% capital gains tax on your investments before you have sold them. So say your stocks go way up, you're going to have to pay 44.8% before, without having sold the stock. And then of course, if it goes down, you just paid all the capital gains. It's going to blow 401ks and IRAs and 403bs and all of that just out of the water. I've said that to a couple people in the past day or two, and they're like, what? So talk about a perfect time to put your money in an IUL for a retirement vehicle. Like, you're not going to, if that happens, God forbid, but it would make our lives ridiculously easy.
Right. I would agree with that.
How would you like to put 44.8% more in your pocket by simply doing this instead?
Or how about skipping taxes altogether?
Yeah,
Right.
exactly. Yeah.
Yeah, I didn't think of that. I thought of the, like, my kids have a house. Let's say they paid 200 grand here in Nashville. They bought it the right time. Let's say it's doubled in value to 400 grand. Now I think a house, I mean, it's capital gain, right? That's a capital gain on your house. And so under this policy, it's long-term capital gains are 25%. So they would have to put 25% of the gain, 200 grand, into taxes. Where are they going to get that money? They're going to have to either refinance the house or they're going to have to downsize. So that proposal is scary, but it definitely works in our favor. So great point. I love that. So, all right. You're the first one to bring up politics, but
Well, it's not necessarily just politics. It's just a bad idea.
Bad policy.
You know what I mean? It's just a bad idea that would hurt so many
Great
Americans.
for us if it was actually go through.
Yeah. Well, we need to start talking. I mean, we could talk about that right now. You know, there's some proposals tax unrealized capital gains. So why don't we set up some tax-free retirement income so we don't have to even deal with taxes? So
It's just another arrow in your quiver, you know,
it is
to
good.
win the argument.
Excellent. Well, thanks for bringing that up. Appreciate that.
You're welcome.
So guys, next week, this was a great turnout. For the first time, we hit 40 people. And I know we have, you know, and that we should have 50 on here because this is where you learn. This isn't the only place you learn, but you know, you walk a mile, you see a mile, right? So the further down the road you get, when you get new information, your ears hear completely new stuff that you've never heard before. And we've said it before, but you haven't heard it because your brain hasn't gotten the basics down. So next week, we're going to dive into illustrations. Probably take an hour and a half to do it because illustrations is a big topic. And I would say that when we finish, we'll have 10 people with their hands up. So anyways, if you have any questions, text us. I got some people who want to get information on that software. We'll get that to you. I appreciate Francis. You know, I put in the chat between Francis and Daniel this month. Combined, they're at just about a little under 100,000 issue paid. So you're hearing from people who really, you know how to write and how to build a business and earn a six-figure income. So we'll dive into illustrations next week. We appreciate everybody jumping on. You guys have a great weekend, Labor Day weekend. So enjoy it with your family, and we'll see you next week, same time and same link. Okay. Thanks, guys. Appreciate you. Thanks, Wendy.